Our next speaker is Todd Churchill. Welcome, Todd. Grateful you're able to join us. We look forward to hearing from you. You're one of the favorites here, so I don't know what exactly you're going to talk about. Somebody asked me, and I said, we're both going to be surprised because we've talked different ideas. So we'll just roll right into your presentation and look forward to hearing from you.
Sounds good. Welcome. For those of you that I haven't met before, Todd Churchill out of southern Minnesota. Spent my whole life around cattle. Grew up on a farmer feeder operation with a 500 head feedlot in northern Illinois. Came to college in Minnesota. Went into public accounting, and I've had a consulting business as a part-time chief financial officer for food and ag clients since 1997. In 2003, I started a little hobby, what I thought was going to be a little hobby thing, selling some grass-fed beef to a few grocery stores, and that got completely out of hand and turned into the first nationally distributed grass-fed beef brand in the U.S. called Thousand Hills Cattle Company. I sold that in 2015 when we were killing about 6,000 head a year. And I sold it because the Australians figured out that they'd been selling very cheap what amounted to grass-fed beef into the U.S. for years as the lean grinding component to make our 80 to 85% burger that Americans love. And because they have national animal ID, it took them less than 10 years to get their entire country certified organic and certified grass-fed. And they were able to deliver an identical product to my grass-fed ground beef, which I was getting $4.50 a pound wholesale for. They were able to deliver a product that I could not tell the difference in a blind taste test for $1.80. Now, you had to buy a whole container load, and that was delivered to the West Coast, but I could tell that my business didn't have much of a future. Now, the Australians couldn't, their steaks and roasts were terrible because they're primarily using cull cows and bulls to create their grind product, but the grind is every bit as good as American grass-fed grind. And there was no way that I could charge my customers more for the steaks and roasts to be able to allow me to sell my grind for $2. So sold the business to my business partner, and he's amazingly been able to keep it going, keep it alive. I'm not exactly sure how, but he's done a great job with it. And I went back to consulting, and then 4 years ago, I was asked to lead to go to work for a big CPA firm, which was actually my first employer right out of college, called Clifton Larson Allen. We're the 8th largest CPA firm in the country. We have the largest farm and ag focused practice of any CPA firm. And I was asked to lead our industry group that provides those services to our farm food and beverage clients. That's what I do now. I had not been an employee for 25 years. I didn't think that I would be able to transition back to that kind of a role, but it has worked really well. And I'm having more fun than I imagined I would. What I want to talk about today is a legacy business, and this fits really well with the Ranching for Profit information, because you really need to think about and understand what is it you're trying to create. And ag businesses have a very challenging time being what I call a legacy business. And a legacy business is a business that you don't want to sell. You don't want to sell the underlying assets, and you don't want to sell the business itself because it has these 6 characteristics. First of all, you produce something that customers can't live without. The second thing that it does is your competitors cannot duplicate your product. You're by definition not producing a commodity, and it's not easy for your customers to substitute a different competitor's product to yours without noticing the differences. 3, you have the ability to set your price. When your costs go up, you're able to raise your price to your customers, and because they can't live without your product, they may not like it, but they will pay that higher price. Most of you can't live without a internal combustion engine mounted to tracks or tires that produces more than 100 horsepower. And so you will pay whatever it costs in order to get the efficiency and the labor savings that's created by that device, and you can't live without it. There's a limited amount of competition, and they all charge more or less the same thing per horsepower, and they get to set their price. The fourth thing that we want in a legacy business is profitability. We want to be able to produce this product that our customers can't live without and our competitors can't duplicate, and that is profitable for us to do. And profitability is usually dependent on the ability to set our price, so that when our costs go up, we pass those costs on to our customers. Sometimes profitability is a function of being able to decrease costs in order to. So one of the ways that we make it hard for competitors to duplicate our product is by having a product that's unique and different that nobody else can do. Another way that we do that is we are able to offer that product to our customers cheaper than our competitors can. Sometimes that profitability means that we found a way that to produce an identical product that to our competitors that's less expensive for us to do than they do, and consequently we're valuable to our customers because we're the cheapest option. There has to be the potential for growth. Growth is, we function in a finance system that is predicated on growth. We can debate for hours, and I love to have these debates, but we can debate for hours whether or not that growth is sustainable, whether it's realistic, and whether it's even good. But the truth is that we live in an economic system that is founded on the assumption that growth happens. And so we need a business that is capable of growing. And the other thing that matters about growth is if you are producing something your customers can't live without, the reward for doing good work is the opportunity and privilege to do more good work. You will absolutely grow if you are successful at delivering to the marketplace something that your customers can't live without. They'll tell, that word will spread, and you'll have more demand than you currently have. And the last one is, this has to be fun to do. If you can check all those boxes, and it's very hard to do that in ag, but that is the goal. That's what we're trying to create here. All right, now, I'm sure all of you have already looked at that list and said, I got maybe 1 out of 6 in my ranching business, in my livestock business. This is harder to do than we think it is. So these are some of the things that we do to respond to the fact that we don't really have any of this. First thing we do is we tolerate, and we tell ourselves that it's okay that the actual amount of money we're able to transfer into our personal checking account from our business checking account every year. And please tell me that you have 2 separate accounts, and that you run your business in your business checking account and your personal checking. The fact that we can transfer less and less into the personal account every year, we tell ourselves that that's okay because we have a great life. And we do have a great life. This is a picture of my kids moving a group of grass-fed finishing cattle on one of our pastures at home. It's an awesome way to live. It's an awesome way to raise a family. And that is a true statement, but we rationalize the fact that we don't have any of those things that a legacy business needs by telling ourselves that the non-financial benefits offset the lack of financial success. Sooner or later, somebody has to get an off-ranch job, even if it's just for the benefits. In many cases, that's what drives that decision. We tell our kids, either deliberately or unconsciously, there are no opportunities for you here, and I can barely make enough to pay myself. There's no way that I could add you to the payroll. So what our kids learn, whether they want to or not, is that they need to go and create opportunities for themselves that are probably someplace far away, probably someplace in a city. And then finally, we reassure ourselves that because our underlying land asset is increasing in value at 6 to 10 or even higher percentage numbers every year, it's okay that our operating profit or our operating losses, as the case may be, that as long as that number is smaller than the underlying increase in land value, we're doing okay. And I personally am experienced with all four of those things, and I personally have clients that spend time there. All right, one of the basic things that I need you to understand about commodity markets. This is what I call fundamental of raw material economics. Commodity markets that do not have some kind of a support, like the U.S. government provided for agriculture from it was originally supposed to be from 1917. It was a concept called parity. And basically it said, accounting for inflation, we are going to put a floor in all raw material prices equivalent to 1917. And the theory is that if you price raw materials going into the economy high enough, you can have an economy that functions without debt. And if your focus is on driving those raw material costs low enough, you have to replace what would otherwise be a functional economy with debt. That's another 2-hour session that we don't have time for today, but commodity markets that are not managed return the average cost of production over the long term. So if the average cow-calf producer in the United States, it costs them $1,000 to raise a wean calf, and you can be assured that over any 10-year period of time, commodity markets are going to pay an average of $1,000 for a wean calf. Now there's a cycle. We're in the good years right now, but it is a cycle, and on average, that's the way commodity markets work. Just enough money to keep the average producer at a break-even point. Many of you know Jim Garish. I'm sure you've probably seen this slide that I stole from one of his presentations. Our costs of operating in agriculture have gone up dramatically. The price that the market tells us our products are worth hasn't really changed since the 1970s and 80s. So this is my most important slide. There are 4 ways to win in agriculture with the understanding of everything that we've just talked about. The first is austerity. Reduce your lifestyle expectations so that you aren't frustrated with the fact that operating an ag business is probably going to result in lower and lower margins and lower ability to take cash out of that operating business and use it for your personal lifestyle. Second is to increase scale up. This is the only strategy that's been taught at any kind of ag university or extension or USDA in the last 60 years. You're going to need more production, more units of production to spread over your overhead in order to keep your net income the same. Now, increasing scale only works if you have a positive gross margin. So if a wean calf is worth $1,000 on average over an 8-year period, and it costs you $1,400 to raise a calf, buying more cows is only going to drive you in the wrong direction faster. So you don't want to increase scale until you've figured out why are you a above average in your cost of production. And by above average, that's a bad thing. Your average cost of production per unit is higher than the national average. Scale only works if that number is still positive. So you have a certain amount of overhead, property taxes and utilities and land payments, let's say, and you have to cover that. And the concept of increasing scale is you need more units of production. You need more cows and more acres of grass in order to produce more units. Even if you make less per unit, there's enough total profitability to cover your overhead. The third one is to increase your productivity per acre per cow. This is the whole point of regenerative ag and regenerative practices. How can we use what we already own, what we already control, more productively? And my good friends Alan Williams and Gabe Brown and others that have been teaching regenerative practices for 25 years, I've seen all their data, and nearly every rancher that applies regenerative grazing practices doubles their carrying capacity in 5 years. That's a pretty incredible way to win, because it doesn't involve you to take on more debt, more stress, and manage more scale. You just have to manage what you have more intensely. And finally, adding value to the raw material. Go from selling a wean calf to selling a yearling, to selling fat cattle, to selling meat wholesale, to selling meat directly to a consumer. The closer you get to the end user of your product, the greater share of their dollar you get to take. Now, that's complicated. You have to develop skills and the ability to succeed in those other value-added activities or enterprises. But that is one way that you can win. So what I want you to stop right now and write down is, what is your primary strategy to win in agriculture? That doesn't mean it's the only thing you're going to do, but everybody needs to pick one of these strategies to focus on, so that you have an understanding of what you're going to do as you plan your future. All right. Many of you who are ranching and need a large land base, and you live in a place where that land base has scenic and recreational value, are dealing with a unique phenomenon that nearly all men, and my experience is mostly with white men, once they achieve a high level of wealth, let's say $30+ million of net worth, usually by building and creating a legacy business in technology or in construction or in real estate, they are compelled to go buy a ranch and own cattle. And you see those buyers coming into the Intermountain West. They don't want to buy, surprisingly, they don't usually buy a ranch in Mississippi or Alabama, or Eastern Oklahoma. They want to buy a scenic ranch that fits the picture and image they have in their mind of what it takes to be a rancher. This is an incredibly powerful instinctive drive that is almost universal. So they have access to wealth that they created by building a legacy business in most cases, or operating as a senior executive, a long-term legacy business. And they want to use that wealth to own a ranch and have some cattle. That's not going away, so you need to understand it. You of course can't pay for ranch land with the operational cash flow that's created by livestock in anywhere in the U.S. But you for sure can't do it in areas where there is scenic and recreational value. However, that creates opportunities, because all of those acres and all of those ranches need assistance with proper management. They don't know how to do any of these things, and they don't even have the basic common sense wisdom about livestock management that people that grew up in this industry have. All right, so here's the next thing I need you to understand. You have to have a team, or you yourself have to develop the skills that drive success. And most of us in ranching and farming, we chose that as a profession because we like doing stuff. We like cowboying, fencing, taking care of animals, doing chores. We like maintaining the tractors, and we like getting out and getting that ground worked up and getting the seed in the ground. That doing is what we do when we feel stressed, when we're under pressure. Unfortunately, as the old saying goes, if you want to be a cowboy, get a job. Doing skills are not a very important determinant of long-term success in agriculture. And it's relatively easy to hire somebody who wants to do the doing things every day. Thinking skills are much more important. These skills go in order of importance for your long-term success in ag. Understanding the rules of business that you're in, and not what you should and shouldn't be doing. What does it take to create a legacy business is vitally important. You likely can't succeed unless you have enough people skills that you can learn from, influence, and persuade other people to work with you. Now, this is a challenge for those of us in ag, because if you are in a position where you own ag land in the United States, you are very likely the product of 4 to 10 generations of being the most disagreeable person in your genetic heritage. It is what it is. When you look back at how land ownership has evolved in America and who owns the land, it is generally the most disagreeable person in the family. And then it's the most disagreeable person in the next generation. That's not always true, but there's a lot of truth to that. So those of us who own land, we're starting at a disadvantage because we start with more disagreeableness as a personality trait than average, and that makes it harder for us to work with people. Not impossible, but we need to acknowledge that, laugh about it, and then figure out how to be willing to make some changes in our skill sets, because we're not going to succeed if we have to do everything by ourselves. Leadership skills. Do you have a dream bigger than yourself that is inspiring enough that other people want to come and harness their wagon, your vision? That is the whole point of building a team, is other people say, instead of chasing my personal vision, your vision is so compelling, I'd rather be a part of what you're creating than to go create something on my own. That's part of what is required to build a successful legacy business. And then you have to have the financial skills, because you have to find a way to pay a team. If you want other people to join your team, you have to pay them usually before you have the profitability to afford to do that. All right, so I want to go back to this slide. I want you to rank yourself on a scale of 1 to 5. 5 is good, 1 is bad, in doing, thinking, people, leadership, and financial skills. And here's the question. When you are under stress, what do you do that relieves that stress? If you go get on a horse and move cattle, if you go doctor cattle, if you go build fence, that means you have a natural desire to want to do those things. If you sit down and really you get away from everybody else, you just need time to think, because that's what solves your stress, then you are a dominant thinking skills person. If you want to go talk to other people and see if you can figure out how to get other opinions and talk about what's not working, chances are that's your natural instinct, your bent is towards people skills. Same way with leadership and financial skills. All right, the next thing I want you to understand is there's 3 kinds of problems that we like to solve. Thing problems, like we've already talked about. Theoretical problems, which is systems, concepts, logistics, things that are abstract. How do pieces fit together? How does a distribution system and the whole beef supply chain work together? So I've had lots of people that have talked to me in the last 2 weeks and said, man, these tariffs are great, because it'll be great that Australian beef is so much more expensive now, and then we won't need to import so much of it. It'll make American beef more competitive. Well, no, it doesn't actually work that way. It's actually a tariff on imported beef is going to almost certainly crash the market for feeder cattle. And I don't have time to explain in great detail, but packers are already losing $200 a head on fat cattle. One of the major profit drivers for a packer is buying lean trim at 90% lean, blending it with the 50-50 trim that comes off of a choice steer, and producing an 80% to an 85% lean trim, lean point ground that goes to McDonald's and Burger King and everybody else that buys hamburger. If the lean point of that product goes up, by definition, the value of the fat component is going to go down because consumers aren't going to pay more for their hamburger. Not if we want beef demand to stay high. So that means that that's going to take at least $50 to $75 of value off of the carcass. Now the packers are losing $275. Well, the packers are probably going to pay less for fat cattle. And if they pay less for fat cattle, feedlots are going to pay less for feeder calves. And then those feeder calves are going to roll through and calves are going to be worth less. So it's not as simple as just saying that imported beef is bad and domestic beef is good. We need all these pieces together, and you need to have an understanding of how that system works to be able to predict the future. And then the final problem is people problems. Are you curious about why people do what they do, or does it just annoy you when people don't do what you think they should do? Are you curious, or are you judgmental about other people? If you are curious about people and you just find people endlessly fascinating, you like to solve people problems. You probably shouldn't start a direct-to-consumer business if you can't stand people. If dealing with people makes you crabby and irritated, then you probably don't want to get to the point. You probably want to lessen your need to depend on other people to do what you want them to do for your business plan. So what we do at CLA and everything that I've talked about at this point is just to help you begin to understand the things that really drive success in ag operations. Once you get through that and you understand what your strategy is, now we need an accounting system that can tell you with pretty good accuracy how much cash are you making or losing from each portion of your ag business. And the more complex it is, if you have crops and hay and cows and calves, or cows and calves and a yearling business, you need a more sophisticated accounting system. If you have multiple generations involved and communication and it isn't always great, you're going to need more help and a more sophisticated controller or CFO to lead that part of the business and help provide everybody on your team and in your family with good financial information so you understand what's working and what's not working. The best practices for the clients I work with is we want to have an enterprise level P&L that rolls up, all those enterprises together roll up into your tax return. We want to have a budget for those enterprises. We need to come up with a way to allocate expenses. How do we decide which enterprise pays for the fuel in March? Well, it's probably not the hay business. It's probably, most of the fuel we used in March is probably feeding cows. So they should bear the majority of that fuel cost. We need to have an easy way to allocate those expenses. We need a disciplined financial review process where there's a monthly 1 to 2 hour meeting with your CFO to review what's happening. Here's what we thought was going to happen this year financially. Here's what's actually happening. Let's talk about, are we on track or off track, and what are we going to do to get back on track? We need something way, way better than just your checkbook and a cash basis tax return to evaluate your business and the financial health. And then we're going to set a goal for how much cash are we going to take out of the operating company and put into the personal checkbook every year. I'm happy to visit with anybody that wants to talk. You know, the freebie that comes from me is an hour of free consulting with me. You've got on the screen here my phone number, my email address. Would be happy to visit, and I'm happy to take questions, Jared, if you feel like we have time for that.
That's awesome. Yeah, our next speaker is ready to roll. So we feel free, if you have questions, go ahead and put them in the chat for Todd. And if you want to answer those through the chat, that would be the best way to do that, Todd.
Great. Happy to do that.
very competent at what he does, has, the understanding from a producer with the mind of an accountant, a CPA, a CFO, very competent at being able to analyze things and offer strategies with the expertise behind it. So highly recommend Todd. So thank you, Todd, very much for being part of this.
Happy to be here. Thanks for inviting me.